Hello, everyone. We have received a lot of questions over the last few months on the One Big Beautiful Bill and what it's going to mean for your taxes and finances. It's important to stay up to date on this legislation because it's changing a lot about the tax code. So without further ado, let's jump straight into it. There are several temporary deductions that are going into effect. Firstly, the 2025 standard deduction will be increasing to $31,500 for married couples filing jointly and $15,750 for single filers. There are also some new senior deductions going into effect. If you're over 65 with an adjusted gross income under 75,000, you can get a bonus of 6,000 per person. So if you're married with an adjusted gross income under 150,000, you can get 12,000 total if you're both over 65. You can get this benefit whether you itemize or take the standard deduction. For 2025 through 2029, state and local tax deductions are increasing from 10,000 to 40,000 for taxpayers with incomes under 500,000. Other new temporary deductions for 2025 through 2028 include no tax on tips, no tax on overtime, and car loan deductions. We will go into each of these a little more detail and add some clarity since they aren't exactly what they sound like on the surface. For no tax on tips, that applies for up to 25,000 in tips annually. Anything over that will be subject to taxes. For no tax on overtime, that applies to up to 12,500 in overtime for individuals and 25,000 for joint filers. Anything over that will be subject to taxes. Until 2028, you can also deduct up to $10,000 on car loan interest for vehicles assembled in the U.S. Some changes will be effective in 2026 and beyond, including the estate tax exemption, child tax credit, new savings accounts, student loan assistance, changes to charitable giving standards, and the 1099 NEC threshold. The estate tax exemption is rising to $15 million per individual. Estates valued below the exemption can be inherited with no federal estate tax. The child tax credit will be increasing to $2,200 per child and will be adjusted for inflation after 2026. Some new savings accounts will also be available, including the Trump Savings Account for Children. Parents can add up to $5,000 and employers can add up to $2,500 per year for minor children. For babies born between 2025 and 2028, the federal government will make a one-time $1,000 contribution to a Trump savings account. The account must be invested in a diversified fund that tracks an established index of U.S. equities, and children can't take out funds until they reach age 18. If you have student loans, here's some good news. Employers can now help pay student loans up to $5,250 per year. The limits are adjusted for inflation after 2026. Payment is deductible by employer and tax-free to employees. Starting in 2026, from the One Big Beautiful Bill, you can deduct up to $1,000 for single filers and $2,000 for married filing jointly of cash charitable giving, even if you take the standard deduction. Lastly, if you're a 1099 contractor, you should know the threshold for a 1099 NEC or 1099 MISC is increasing from 600 to 2,000. So you will not receive a 1099 if you made under 2,000 from contracting during the year starting in 2026. That limit will be indexed for inflation going forward. If you have any questions about the One Big Beautiful Bill and how it's going to impact your taxes and finances, please feel free to reach out to our team. We would be happy to walk you through the changes and set your mind at ease.